Hey guys, welcome back to the channel. Hope you were doing well. Well, today the market tried to pull memory back down to earth, but guys, the fundamentals are still too strong. They're still in orbit. You know, on this channel, we've talked about how memory has decoupled from the broader market. Well, today was the ultimate stress test. We saw the Dow Jones Industrial Average shred over 700 points. Oil screamed up over $100 a barrel. And we saw our memory titans, or the Fantastic Four, get caught up in the macro wash. But make no mistake about what we saw today. Today was a flight for cash. It was not a flight or a run from the memory supercycle. And if you're looking at your portfolio or you're looking at your phone and seeing red and wondering if the memory stocks, if the decoupling is over, you're looking at the wrong numbers. Today, we're going to talk and we're going to discuss why the business of memory is still untouchable and what the prospects are for tomorrow when the opening bell rings. But if you haven't done it already, hit like, hit subscribe to the channel. Appreciate you guys being here. And let's dive in and talk about what we saw in the market today. Guys, first I want to set the stage for what we saw, which was I'm going to call a geopolitical shockwave. I think these factors are the main reason for what we saw across all of our indexes and across all of our top stocks today. We saw earlier that the new supreme leader of Iran said that he feels the Strait of Hormuz should be closed. There were reports that they're mining the strait. This caused oil to skyrocket up over $100 a barrel. I saw some reports getting it closer to $102 a barrel. It might have even been higher throughout the day. It brought fear and anxiety back into the market. The VIX index, or the volatility index, jumped 13% today. Based on those two factors, institutional algorithms, I believe, triggered a sell everything protocol, an escape from risk to safe havens. And on top of that, we saw the 10-year yield spike to 4.3%, almost 4.3% today. In a normal market, when you see a yield get that high, it's a death sentence for tech. You see rotation into safe haven plays. And we know the S&P in general has been struggling today. Struggling this year, excuse me. Let's just take a look at what it's been doing. Today was down S&P 500. If you look in the upper right-hand corner, you can see it was down by 1.5%. But guys, let's just look at the time frames. 1 week, it's down by 1%. 1 month, almost 2.6%. And on a 3-month time frame, it's down over 2%. We really have to go back all the way 6 months to see an area of growth in the S&P 500. And this is what we've been struggling with our portfolios. Many of the stocks that each and every one of us own are tied up in the S&P 500. And it's been a rough start of the year for that index. Today, we saw a little bit of the old world economy, meaning oil and interest rates, go after and attack the new world economy of AI trades. So we're going to take a look at what exactly happened with Micron and the other memory players today. We're going to look at how the institutional and retail investors differed today. What was their trading activity like today, and how was it different? What happened in the dark pool, the after hours activity for Micron specifically? And I'm going to tell you what I think tomorrow, why I think today's activity, again, sets us up to buy Micron at a discounted price. This is a massive player with massive demand in the market. But first, let's jump in and listen to hear what Larry Fink from BlackRock has to say about his sentiment on oil and how he's looking at the market right now overall. So I'm going to jump over and pull us over to that guy.
I don't pay much attention to the short-term volatility, but I focus more on these longer-term trends. Do I believe the war is going to be lasting a long time? No. Do I believe oil is going to be reverting back to where it was? Maybe even lower. I mean, if the outcome of the war is a neutralized Iran and they are allowed to be selling products into the market again, oil products into the market again, I mean, there's probably a great probability that oil is going to be below 50. I do believe the markets find a way to balance out.
So guys, I love a couple things that he said there. One is that he doesn't pay attention to the short-term volatility. He looks at the long-term trends. I think we've talked about this on this channel is how do you separate noise from signal? How do we ensure that we are not getting rattled by short-term volatility and losing and dropping or moving off of assets that have given us long-term return and long-term growth? In the back end of this video, I'm going to kind of show you the long-term return that these memory stocks have given us, hopefully just to regain your confidence. If you're rattled today, if you have any worry about this sector, about what's happening and what's happening in memory overall, what's happening around the globe with all the the volatility that we see. So I want to just rebalance or kind of bring back our focus on the long-term growth that we've seen from these stocks. I also love that he said, I think we could see oil at a lower price. And I think he mentioned that the markets find a way to rebalance it. I think that's what we'll see tomorrow. The markets are going to rebalance some of this risk. We've seen it all week long. It's really kind of been back and forth for the last couple of weeks, honestly. But I do think the markets will rebalance. I think we're going to see risk kind of settle down a little bit. We know the IEA has released 400 million barrels from their reserves to try to bring oil prices back down. So hopefully we do start to a movement of risk lowering. We start to see some rotation back into our favorite players. But I want to first talk about why I continue to feel that memory is decoupled overall. And it's really simple for me, guys. It is the fact that the locked-in demand that we continue to hear, not only for HBM, the locked-in demand that we see for NAND, and the locked-in demand that we see for storage from Western Digital and Seagate Technology. But focusing particularly today, Micron came out again and said that their HBM4 product is fully committed for 2026. So while the market is worried about recession, Micron is so far beyond that worry that they literally cannot take orders for the next 2 years. They aren't just decoupled from the market. They are insulated from everything that's happening around them. And SanDisk is the same way. SanDisk, we know, is sold out for their NAND product. They're down 6% today, but we can't lose focus that they're up over 125% year to date. This stock has been on a massive run, and it does move more volatile. It has more volatility than the others. Let's take a look at how they performed today, the memory stocks overall. So I'm going to jump back over here. I'm going to scroll down. We'll just take a look at how the memory stocks perform. Let's start with Micron. You can see, if I go back to today, Micron closed at 405, down 3%. After hours, it's down about 0.3%, 404. So staying relatively stable. You can see it opened up at 410. We got up to about a high of 413, 414 today, and actually it rose down. It faced pressure. All four of these stocks, is funny, you're going to see the same trend. They all reversed right about 11:15 on Eastern time. So you can see Micron hit a low of 396, dipped below 400. It was great to see the support immediately come back up. And it stayed in this support level of about 407, 406, 405, we'll call it, the rest of the day. And it finished at 405, as I mentioned. So it was nice to see it go below 400 and get immediately bought up and find that psychological level above 400 again. Great to see that overall. We see the RSI with Micron is around that 48.50. So it is a perfectly neutral right now, not overbought, not oversold. I'm going to show you some interesting activity in the dark pool in a moment. So make sure you stick around the video and listen to that. But let's take a look at the rest of our players. SanDisk came out, opened up to about hit a high of 651. So it tested that 650 level that we talked about yesterday or the day before. And then similar activity, faced a lot of pressure. Overall, we saw rotation out of these assets into other safe haven plays. It got down, again, same time frame, about 11:23, a low of 612, found some support, and kind of ran out the rest of the day around that 620, kind of call it 615, 620 range. Closed at 618. After hours is about 615 right now. Western Digital was a little more stable today. So came out, reached that high of 268, 269, we'll call it, right out of the gate. Came down, found resistance, hit a low of 257, but found support again. Finished at 261. After hours, it's about 261 right now. So that stock is staying pretty stable in the after hours overall. And then Seagate Technologies closed today at 374, currently at 373.3. In the after hours, just down slightly. You can see same trend. Found resistance, faced some selling pressure until about 11:15 Eastern time, and then got support, and then kind of finished out the day in a more of a stable pattern overall. Reached a high of 385 today overall, and finished at 373 on the board overall. So definitely an interesting day for me. I think with all the pressure that we saw in all the indexes, I was actually pretty happy the way the memory stocks held. I don't know if you guys felt the same way. They faced a lot of resistance today, but they found support in the afternoon session, and they rode that support through. That was a really good sign for me overall, that they didn't continue to sell off, that there is a lot of bullish behavior and buying support for these stocks in the market right now. And I think that we know why. It's based on the demand. It's based on the sold out factor, whether it's HBM, whether it's DRAM, NAND, or storage. There's just massive opportunities for these companies in the market. So let's talk about the differences between the institutional and the retail investors today, particularly with a focus on Micron. So what we saw overall was the institutional investors were definitely the ones that were driving the downward pressure in the afternoon session today. We know why. Micron's been on a parabolic run, significant run. There is profit to take there, and it's exactly what we saw with some automated profit taking. As soon as that oil hit over $100 a barrel, as soon as we saw the VIX get up close to 27, 28 today, the fear and anxiety came back in the market. There was just a rotation from the big players, and you're going to see it with stocks like Micron that have been on a run. There was this rotation, as I mentioned. And the trading volume today overall is interesting. It was lower for Micron. So it was about 31 million shares traded. It was about 12% lower than the 30-day average. I think this is a really good sign for Micron. It indicates that while the price was dropping, it wasn't a panic dump. It wasn't a panic sell by the institutions. It was a low volume drift as big buyers stepped aside to wait for tomorrow's PCE report at 8:30, and also just to shift some funds into safer assets for the moment. So the other thing that we saw with Micron is kind of interesting. When you look at the options on the institutional side, it was about 41% today were puts. And so it was about 380,000 contracts overall for Micron. So showing that the big players are buying insurance against a potential inflationary report tomorrow. If the PCE report comes in hot, there could be some fear that it's going to have an impact across the sectors and push the stock down. So you saw a little bit of insurance play from the institutional investors today as well. But the retail investors was a different story, guys. Retail investors today for Micron were bullish. And when you look on any posts, any retail platforms like Reddit or X, you can see that they were all in. They were using today's opportunity to buy the dip. There was actually a bullish score of 88 out of 100 for retail investors today. So the retail flows stayed positive throughout the afternoon. While institutional investors were selling in that low volume drift I mentioned, the retail traders were scaling in, viewing the 400 level today as a major support zone ahead of the March 18th earnings next week. And I want to talk about some dark moves overall that we saw, guys. So if I pull this up, you're going to see the Micron's kind of closing cross as well as their after hour moves. And so to make this a little easier, I'm just going to take away all the noise. I want you to focus on that bottom line right there. You can see right at the closing bell, we had a trade that it was about 2.4 million shares for Micron that happened at the bell, almost $1 billion. So 957 million. The takeaway for me on this is it's when you see $1 billion of Micron exchange hands in a single second to close like that, this isn't retail. This is a massive institutional rebalancing that we saw. And the fact that the price held at 405.35, despite this enormous volume, it shows that there was an equal wall of buyers waiting to soak up every single share that this seller was offering. It is a massive, really good signal for us. And I also want to just draw us back. Take a look at all those sweeps you can see on that in the second to last column under condition. All the sweeps heading into the close. This is a great sign, a very bullish sign as well. This shows us that when a sweep is like that, it's like a buyer is so eager to get into a position with the share that they'll go across multiple exchanges to fill an order instantly. And a sweep on a day when it's red like today is a highly bullish signal. It means that even if the price was drifting lower, aggressive buyers were stepping in to grab liquidity wherever they could find it. And then I want to draw you to one last piece. So I show you the closing cross. But then what happened in the after hours? This is everything after, all the way up till the last time I looked was about 5:50 at night. I'm going to, again, make it easy. I'm going to call out a few here. I know it's still a little busy, but I'm trying to highlight them the best I can. And you can see at the 401, we had a $23.5 million dark pool activity. 402, a $20 million. 403, $22 million. 403 again, about 404, 53 million, and finally about 515 or so, 54 million trade activity. This is this after hours surge that we've seen here between the close at 4 to we'll call it about 550. There was a heavy concentration of multi-million-dollar marks that were being executed by the dark pool. Now notice that every one of those, I want to draw your attention in that price column. You can see they were all traded at exactly the 405.35 print. This late print activity suggests that large institutions were quietly filling orders all afternoon and reporting them after the bell to avoid spiking the price. They're essentially parking their capital in Micron at 405, treating it as a safe haven while the rest of the tech sector was bleeding. Today's closing and the after hours show us that the institutions aren't running for the exits. They are building a fortress. This is what decoupling looks like in real time, guys. It is a really strong sign overall for Micron. It is a strong sign, bullish strong sign as we head into the market tomorrow. So, in closing, I'll say a couple things. That today was a day of hot money took a breather, but smart money didn't flinch overall. SanDisk 6% drop sounds steep, but in the context of its 125% year-to-date growth, it's just healthy consolidation. The story is the same across the board. Whether you look at NAND, high bandwidth memory, cold storage, they're all completely sold out from lead players. You can't run an AI revolution on $100 oil alone. You need these chips to run the revolution. So tomorrow, when the PCE report drops at 8:30, if it gives the market a little inch of breathing room, meaning if that PCE report comes in a little cooler than expected, then we should look for these memory stocks to be the first ones out of the gate. That they are already decoupled. We know that they move differently. They will be the leaders of the pack if we get a little bit of a break tomorrow with the PCE report and we feel the anxiety and the fear in the market come down a little bit. In closer, I just want you to play a video and then draw us back to remember why we love all these stocks. So let's go in and play that video, and then I'll come back and finish the video.
You look at it just from the beginning of the year, you don't necessarily feel so good. But if you look at the longer term and you look at where you were a year ago or 2 years ago to where you are now, you're certainly in a much better position. And you have to understand that, if you're a long-term investor, this is about the long term. To Larry Fink's point, I'm not focused on the short-term day-to-day volatility as much as I am the longer-term trend on behalf of investors.
So I love when he says, I'm not focusing on the day-to-day volatility. I'm looking at the long-term trend. I just want to draw us back to, as I close, look at these long-term trends that we've seen with these stocks. In the last 3 months, 71% growth with Micron, 206% growth with SanDisk, 52% growth with Western, and we got a 31% growth with Seagate Technology. Guys, that's the long-term fundamentals. That's the long-term growth we want with all of these stocks. So no matter if the market throws a tantrum tomorrow like it did today, oil can spike, yields can climb, but you cannot build a future without memory. The decoupling is alive and well, but are you shaking or are you scaling in? For me, I'm not shaking at all. My belief in these stocks haven't changed one bit. I know where I'm standing. I hope you do as well. I'll see you tomorrow. Take care, guys. Have a great night.